Good morning. This is Ron Brown. It's March 30th, 2024. This is my market report, and the subject is determining the underlying structure of the market. I'll probably start a new playlist and do this over several periods and just starting incorporating everything that you can do with HGS Investor. Remember that the market is your teacher, and that's really what this is about. So we're going to look at the underlying structure of the market and learn from it. Okay, as usual, I'm just going to read a few sentences here. Any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell all trading strategies or use at your own risk. If you're not using the software, I'm hoping that this video or these series of videos will make you want to try it at least and become a subscriber. But to get the free trial, just go to highgrowthstock.com. You'll see the link on the page where you can order the trial. And best of all, you don't have to enter a credit card number. But if you do install it, or if you do get the trial, you have to install it and start working with the program because you have 30 days. And there is a lot to learn, and you'll see that it has a tremendous amount of power. That's why there is a lot to learn. First of all, before I get started, I'm going to do a couple of housekeeping things. Now, I don't have this ready to go, but I'm really cutting down on my user smart groups because I only use so many. And hopefully next week I'll show you how to delete all the extraneous or the smart groups you're not using, the user smart groups, and just stick with mine. And as we go through this series, I'll show you why I use these only. But I'm not quite sure yet, so I'm not going to put these out there yet. Another thing, let's see, Major Markets Plus or the market analysis user groups. Of course, we have the non-index groups, which I track every week. And then there is also a market analysis user group. Now, when I do my broad market analysis, these indexes right here, I am using the information from these major indexes, which are down here. Now, these are the same as the indexes in up in the reference groups, but I have a premier subscription to bar charts, so I make sure that these are updated every week and are current. As an example of them being current, I'll go to the S&P 500 and type in SMCI, which was just added to the index, and you can see that it's contained in the S&P 500 folder now rather than the 400. So these are going to be kept up to date every week. Now I'm going to go ahead and get started here, and where I'll start is in my market analysis user groups, or Major Markets Plus folder under the market analysis user groups. And I'll just click through to the warehouse, and I'm not in my favorites here. I'm down in my complete list of stocks, or scans I should say, and I'm in here in the top-down process folder number 1 for index and ETF analysis. I'm going to click on number 1, and you can see that I'm already there, and it's in the Major Markets Plus folder. Now I'm going to make this more visible for you, and I'm sorting on the raw combo. You can see that Bitcoin, the beginning of the week, which would be the open on Monday, last Monday, and since this is a short week, the percentage 5 days goes back to Thursday of last week, but just forget about that. Beginning of the week is always the open on Monday, and where it's ended after that, and I'll show you that. Let's just, I'll bring up the BITO, and what does it say here? 5.6%. If I click on my alternate A key, it brings up the annotation tool, and if I go to the open here and click on that, And this is as close as I can get. It says 5.4 down here, but this isn't very precise. See if I can zoom in a little bit more on this. Get a little closer. Okay, I'm trying to get it right here on this line and get it up here. And see, that says 6.1. But take my word for it. This column represents the price from the open on Monday to the close on the final trading day of the week. In this instance, it was on Thursday. So here's one day, beginning of the week, and then here's 5 days, 21 days, and so on. But you can see this just gives me a real good snapshot of what's happened with these indexes over these time periods. And since we've been in a real bull market in Bitcoin and most of the other indexes, if not all the other indexes, well, just look at from the beginning of the year, these numbers. So what are the major indexes saying? They're saying, if you just look down this column, that it's still a very strong market. Here's one day, but the beginning of the week, I pay a lot of attention to this just so I know what happened during the week and where was the strength. It was in Bitcoin primarily. This is the Ultra VIX, the red area, but the other, I'm sorted on this one. I can quickly see where the strength was and look over here, utilities, small caps, Russell. Small caps were leading the way this week. What's down here at the bottom? The QQQ is at the bottom, only up 0.1. NASDAQ Composite up 0.2. Now looking at some of these other things, this is the days since the 3-day crossover. So 0 is the crossover day. 4 days ago, Bitcoin crossed over, and the same thing on the volume point of control. These columns are very important because it gives us a feel for how long these trades have been on, either on the long side or the short side. Now I'm going to see if I can change this to red. Shows up a little bit better. So just by looking at these columns right here, you can tell that we are moving up at least over these time periods. And then when you put the relative strength in here, and not all of these have a relative strength rank, of course. And then you look over here at these fields, it's pretty easy to see that this market is still strong. I'm going to go down here to the small cap 600. And I can tell immediately that this run has been on for 7 days. Now I'm going to zoom out here. And I'm going to drop down. This is a weekly chart here, by the way. I'm going to drop down to my daily chart. And I'm going to use call this my contextual chart. And here is the crossover right here on the S&P 600. There's the crossover right there. Actually, that's not it. It's right here, and right there is your crossover. And the VPOC was already positive, and you can see that there was some volume coming into this. See this big volume spike here? That might have been options expiration, but these blue bars represent pocket pivots on this index. Now I'm just going to go ahead and go from the major markets plus. I'm going to go down to the broad market indices, and here is the S&P 600 index, and notice that it crossed over 6 days or 7 days ago. And this is the computed index in HGSI. So this corresponds, I'm sorry, went to the wrong place here. Major Markets Plus. You can see pretty close. Crossed over 6 days ago for the small cap 600, but then when I jump down to the broad market indices, it also crossed over 6 days ago. The VPOC is 6 here. It was 7 on the other one. But when you see a crossover, you can go down to these broad market indices, and then you can change to the index group. And you can see there are 602 securities in here. And on that day, I'm just going to sort on I'm doing this on the fly. I'm going to get down here. So on that day, all of these stocks with a 6 in this column right here were crossing over to the upside. And everything with a higher number had already preceded it. So we have going up to the top, you can see that some of these have been in long-term trades, but when the S&P 600 crossed over and started moving, anything with a 6 in this column right here crossed over that day also. Now I'm going to do something here. I'm going to isolate those that crossed over 6 days ago. I'm just going to click on the filter. I'm going to click on Edit. I'll click on this field, and I'll type 3. And that immediately brings these up days since the 3 crossed the 6. And I'm going to click on equals, and I'm going to type 6. And notice this column now is populated only by stocks that crossed over that day, and there were 89 of them. Now, there were, like I said, there were several that crossed over before this day. Let's look at the industry and see what was happening, which was actually 7 days ago. So in the small cap, the dominant group, well, here's the easy way to do it. Just click on industry, and it was this has to be in the industry column: banks, airlines, professional services, auto parts, and so on. But clearly dominated by the banks on that day. Now let's see what preceded it by one day. We'll do 7. And you can see that these were crossing over the day before, not that many: PC Insurance, Home Builders, and so on. Let's do one more. Let's do 8. And not nearly as much. So 6 seems to be the magic day, and that corresponds with the index. And I'll go back into the filter, edit it, delete this row, and just get back to where I was. But my point is that with these broad market indices, or when you do your analysis on the major markets, plus use these columns, and it gives you a feel for when these cross over. Look at the NYSE 31 days ago. Now, this is a pretty broad index, but let's look here at the S&P 100 25 days ago. The 500 only 8 days ago, but let's bring it up, and you can see that there was a dip down here in some of the stocks, and then it crossed over again. But before that, it was on a pretty long run based upon this histogram. Okay, let's go to the S&P 100, and I'm going to, this is the Major Markets Plus. I have to go down to my broad market indices and locate the S&P 100. Now see, we're getting a different view of this here because it is a equal dollar weighted index. It doesn't correspond to that long period because there were some slight pullbacks in it. Here's one right here, and then it took off again. So they don't always correspond. But when you see, I'm going back to the Major Markets Plus, that this crossed over 25 days ago, let's just go in to the broad market indices on the S&P 100 index. And let's change it to the index group, and let's alter the filter here. And once again, I just click on here and search for 3. And I want this to equal 25. And there were only a few stocks, or 2 stocks, that crossed over on that day. But they were big stocks, Caterpillar and American International Group. I'll bring up Caterpillar. And that 25-day crossover was clear back here at this point. You can see it very clearly. And the stock has not dipped back down. The 3 has not crossed the 6 to the downside. So here's the run from here to here. If I do my alternate A chart, and let's just take it from this closing price to approximately Friday's closing price, it's a 13.8% run over 25 periods. Now, it's an expensive stock, but this is the type of stock that trades options, and you could certainly buy a debit spread or sell a credit spread on this stock and make a lot more than the 13% if you were holding the stock. Now, it's a lot of capital to outlay. Most of us aren't going to do that, but you can certainly play it with in-out debit spreads, and by that I mean 1 strike in the money, 1 strike out of the money. One of these days I'll make a video and show you how to do that. Now here's American International Group. You can see the crossover here, and it's made that nice run. If we look at the 21-day return on these, 11.2 and 7.9 from the beginning of the year, 23.9 and 15.4. And we're going to back out of here. I'm going to edit this. Delete this row. And come back to this S&P. And this says 8 days ago, or actually 9 days ago, is when this index crossed over. So let's just take a look at this. Now I'm doing this on the fly. I don't know what the results are. I'm going to change to the index group and edit this again. Click on that. Type in 3. And days since the 3 crossed the 6 equals, I forgot the number. I'm going to put 8 in there. Let's look at the preview. Oh, that's the whole thing. That doesn't work. So, okay, on that day, well, 8 was the correct number because here's the S&P index itself crossing over that day, and then these were the stocks that were crossing over with it out of the S&P 800. Right here would be the crossover on Bank of America. Lilly crossed over here. It hasn't really gone anywhere. Target crossed over right here. It's had a nice move. Kraft Heinz crossover is right here. It's had a nice move up. And Schwab, it's moved up from here. Nice move up on that. So you can see that these crossovers are valuable. Now what I'm showing you today is how you can use these crossovers in the broad market indices folder and use this days since the 3 crossed the 6. You can see when these crossed over based upon equal dollar weighting, and then you can go in and isolate the stocks that were crossing over that day and see how they've done. But these columns like I said, are very important because you can see when the 3 crosses 6, which is a short-term indicator. So when looking down this column, you can see that we're in a bull run here because all of these are positive. Now, if they start turning negative, and you see a lot of negative numbers in this column right here, the days down, you'll know that there is a big market shift. Now, I'm not going to have a long discussion here. It's Easter weekend. There's family on the way, but I do want to point out, looking at the S&P 1500 equal dollar weighted index. I'm going to click on this, and we're going to go into the HGS index charts, and let's just run through these very quickly on the S&P 1500. I'll make this larger, and I'll point out that the A's have turned up. They were coming down. They've turned back up, and the E's are going down. This is the A plus B turned up, and the D's and E's are going down. This is out to a new high. Here's the fan, the 200, the 100, the 50, and the 18. This is just shows you how these are rotating on the accumulation. Here's A, B, C, D, and E. D and E are going down. C is going up. B is flat, and A is turning up. A is dark green. Okay, then this is accumulation distribution with the Chaikin. You can see these 2 green bars here. We went from C to B, but this means there's accumulation when you have the 2 dark green, when you have green bars like that. And Chaikin, this is a 21-day indicator, but it has turned back up also. Now here's the advanced decline line on the S&P, and these are the numbers from Friday. 71% were advancing and 28% were declining. Here's the percentage above the 20, 30, 50, and 200-day moving averages. Notice that they're all above the moving averages, and these 3 are turning up. The 200 is flat, but these are turning up. Look at the strength in this market. It just is not slowing down yet. Now on this one right here, these are all dark green bars, which means this is a buy signal. I'd say it's a potential buy signal because this is history now, but it looks like it's going up. This is the same one without the fan, same identical chart. This is just a closer look at the percent or the advancers versus decliners and the percent above the 50-day. Strength everywhere. Now this is a broad look at the market with the 1500, which is the 400, the 500, and the 600 combined into one index. Here are the numbers again. Here's a breakdown of accumulation right here, A, B, C, D, and E. You can see the dominant number is B, followed by C, but everything looks good. These trends are all up. The force indexes are positive. Now here are the force indexes. Here's the 13 and here's the 2. The 2 came down on this slight pullback, but the 13, the force index averaged over 13 days, stayed positive. I didn't want to do that. I want to stay on the S&P 1500. Okay, here's your McClellan oscillator. Going back 2 years, you can see that it's well above the mid-range and turned up, going up. This is a trend chart. And finally, this is what I call accumulation acceleration. It's just one I've added not too long ago, but it shows accumulation here. These bars are in another chart. So everything on the S&P 500 or 1500 looks really good to me right now. I mean, we're all expecting that this can't go on, but so far it is going on. So you just have to ride along with it, and then going back to these broad market indices, you see where the strength is, and you can concentrate on looking for stocks in these. Now, my next report, I'll get more into prospecting for the individual stocks, but for now, uh, I'm going to have to call this quits because it is an Easter weekend, and like I said, there's a family on the way. So have a great and safe Easter. I'll come back with another video next week.